Welcome to TRADEREP. This is Shorthammer. It is the 25th of September 2019, and we are looking at Amazon. Now, yesterday, Amazon had this Sparta moment and fell off a cliff. And usually, at least the last month or so, when Amazon has gotten down to the 1740s, buyers have stepped in and pushed us back up into the 1830, sort of a channel that we've been in, this being the top here and the 1740s roughly being the bottom. And right now we're below that. It looks like we're down around the 1730s right now. And if we remember, on the initial descent, this was the 19th of May, and this is right after earnings, and we see this initial descent, this sell-off to this point here. The low of that was 1717, so we're still a little bit above that, but it's not looking great. And our key for Amazon, what we were watching, because we put out a video on Saturday morning that said watch the 1795 area. And we were talking about that also on Friday, that the 1795 area was very interesting. The reason that area was interesting was that the 1805s was the area that did hold for a while. But even on all these pullbacks, we stayed above the 17. We held above the 1795 area. And what I mean by that was on the day of the FOMC, we had a flare down, and that flare down stopped right above that 1795 area, which set the current, for me, the temporary floor for Amazon to run up. And so when we reversed to the upside, we needed to get through the 1833.78, this area right here, which is the top of the channel. We need to get through that and leg, like buyer step in and let's go. And we did not quite get that. Like we did not quite get that run up that we expected. And the initial push up did not take us above. So the low on the FOMC day was 1795.50, and that was the line that I was looking to hold when we were pulling back. So when we went up, we couldn't get over the top of the channel, and we came right back down, and we went through this 1795 area, and I'm like, oh man, we need to get back over that area and hold, or it's game over. And we couldn't do it. And so we attempted to do that yesterday. The buyers tried to push us back above it. We rejected, and the sellers just jumped in the driver's seat and drove us to the downside. Now, this line here that you see is the top of a channel that goes back to 2015, maybe even a little bit earlier. And each time we've interacted with this channel, we have bounced and gone back to the upside. One of the times that we interacted with this channel, we pierced. So to show you that, let me go to the daily chart. One moment. Now this is the daily chart. Now we see each interaction with this channel, there has been a bullish response. And the time where there was not a bullish response was the interaction that we had on the 17th of December 2018, where we pierced into this channel, went all the way to the bottom of the channel. Now, if we go back, because this channel is interesting to look at, this is where that channel comes from. This is an old channel. Look at these bounces. This is, because I only have this going back 3 years here. This is from 2016 of us being in this channel and finally breaking, hold, and pull back, hold. How important that channel is. And we sort of created separation from that, but we came right back to it. The bounce from it, back into it. The buyers pushed us back out of it. then we just rolled into the bottom, then the buying, then we bounced upside, back down, bounced, we're back to it again, bounced, and this time we're piercing into it. So the expectation, what's possible, is we may go down to the 1673 area. That's very possible because that's where we went last time. It's also possible that we can go through that and go down here to the 1580s. So there are a few things that are possible as far as how far we can go down. But the main thing to note is the loss of the 1740s, if we continue to the downside, is incredibly significant. Like incredibly significant. This is an area that has held on this pullback. You can see it here. Let me pull these down and broaden this so you can see. I don't know why this is dragging at the moment. Where are we? Give me that guy right there. Drag this down. Let's open this up so you can see my price points. These 1740s are important, very important. We were just holding, and now we're not holding. And we have to see where exactly we open up. If there's some news before the open or before the cash session. But we do have the potential to repeat this pattern to go as low as the 1670s. So if you have a bullish perspective on Amazon, what you want is for the buyers to push us back above the 1740s, and preferably when you get above the 1740s, get above the 1756.77 line as quickly as possible, and then sort of resume getting us up out of here back to the upside. If we stay in here, not only will you see Amazon pull down, but you have Netflix that's been bearish. You have Facebook that's pulling down a little bit. Apple's pulling down a little bit. So if these stocks that are some of the biggest and the heaviest on, and also Google, which was trying to break out and just fell into the I'll say the downward spiral of Amazon that just pulled the market down. Then all the negative news that was just coming out. Just general negative news. It's pulling the market down. So those are the heaviest weighted stocks on the S&P, and if they're going down, we're going down. Like you no matter what you're in, be careful because they will drag this market down. So what we want is a pushback above the 1740s before the cash session if possible. And then for the buyers to step in and set the floor again and get us above the 1750s. Right now, I would say the way the market is looking, we're looking heavy. It's showing we're around 1730 by 1733 right now, but it's pre-market. Anything can happen before the cash session. But just keep your eyes peeled to see if we are able to get back above those 1740s. If not, then don't be surprised if we're down around the 1720s. And then if we don't go into the 1690s and potentially the 1670s, that's a clear place to go. There may be a pullback, but if we don't get above the 1756.77 area, I just look at that as a potential fade setup where we just pull back just enough for people that want to get short and expect a roll through the 1740s. If we push over the 1756.77, then I'm going to look for bullish candles and an increase in buyers and buying pressure to get us up out of here above, but try to push us back above the 1762 area. But we're below this supply demand zone. We're below this supply demand line, and right now I think that what we're looking at is potentially more downside unless the catalyst in the market change. That's my perspective on Amazon, and we could take it level by level. But any place in here we could potentially bounce, whether it be the 1720s or the 1670s or 1689 by 1699, this supply demand zone, or we could be headed to the bottom of this channel. We just have to wait and see. But the buyers will tell you, you'll see if there's a reversal on Amazon, it's always clear. You'll see if the buyers step in and set the floor on Amazon. But us being below the 1740s is no bueno. But keep an eye on this and see if we pull back. If we're still below the 17, even if we regain the 1740s, if we're still below the 1756.77, we can still get rolled to the downside and drop the bottom. So be careful. And you want us to be above the 1756.77 if you're bullish, or if you're looking for a lower dip buy or lower buy point, then I guess it doesn't matter to you if we're below this or not below this. But we are below the 1740, which is the bottom of the channel, and we're spending a lot more time below that than we've spent the last few times that we've tested it.